Well, the market was all over the place. The Dow Jones Industrial Average once again relinquishing a 200-plus point gain to stumble into the closing bell. Now, the good news is that a massive sell-off was averted. Moreover, we were reminded of the strength of the U.S. economy, which kind of helped to powered, of course, that fourth quarter GDP. It's the individual consumer out there that's holding things together. That said, though, the savings rate slipped to 2.6% from 3.4% in the preceding quarter, 3.6% a year earlier. Now, this isn't a great sign, but people are more confident when their paychecks are rising and the stock market's on a historic run. Moreover, the question is whether consumers have the ability to keep spending and to keep driving this economy. On that score, I say the answer is yes. Considering employment and wage trends and the ability for people to stretch even further, the U.S. financial obligation service payments as a percentage of disposable income is still at a very reasonable level. By the way, that component contains mortgage debt, consumer debt, auto leases, retail payments, homeowner insurance, and property taxes. So we've come a ways down, and as you can see from that chart, we've got some room to grow. So between the emboldened consumer and perhaps also a humbled Amazon, brick and mortar retail has really had a great session today. And I still think, and I've been saying on this show, they've got room to run. It was the really beaten down names, though, that had the biggest moves today. Sears Holdings up 12%, JCPenney's up 5%, Macy's up more than 4%. Also, oversold consumer staple names had good days, a good day. Clorox is up 3%, and CVS is up 3.5%. Of course, those retailers with huge short positions rocked, and a name I've mentioned on this show at least a dozen times, Restoration Hardware, up 22%. By the way, speaking of beaten down assets, it's been a while since I've talked about Bitcoin, but it looks like they're starting to put in a bottom here. So we brought in one of the best, James McDonald, Chief Investment Officer at Vishnu and Wealth Management. He's also the author of How to Invest in Bitcoin. The question, James, is should we be investing in Bitcoin?
Well, it depends on who you are and what your risk tolerance is.
I'm a person that wants to make money and not lose money.
Then I am saying Bitcoin is a great investment.
Okay.
And I have to say Bitcoin is the sun in the ecosystem for what's been the most powerful financial ecosystem we've seen. And we've been talking about Bitcoin for about a year and a half now, but it isn't new. It's been around for 10 years, and it took Microsoft twice as long to get to a $300 billion market cap as it did Bitcoin. And I look at Bitcoin similarly as that in terms of
a lot of folks obviously are watching it. A lot of particularly younger investors, but even older investors as well. Now, we almost tickled like 20,000.
Right.
And it came all the way down to like 7,000, and looks like it's putting in a bottom.
Right.
How do people know when to get back in? With those sort of swings, it's a pretty tough risk-reward scenario. It
seems tough, but it's really not if you look at historical assets that have grown that large. And so we got exactly to about 18,900, and we came off about 65%. To put that in perspective, Microsoft between January of 2000 and January of 2002 lost over 70%. We've seen names like Oracle.
But then it took Microsoft, what,
took it 10
14, years. Right, to get back to where it started. So, I mean, we're not going to look at a dozen years before Bitcoin gets back to 19,000.
That's what's so amazing about Bitcoin and the other cryptocurrencies in the space is that they've gotten to these very high levels so quickly. And then if you look at that comparison, Microsoft was a leader in a specific segment of the technology space, whereas Bitcoin is the leader in an entire ecosystem of financial payments, and the potential is much, much larger. So I do see a lot of upside ahead for Bitcoin. There's going to be some volatility, as there has been, but again, as I said, relative to the tech names we saw in the previous revolution, Bitcoin's downside has been significantly much less.
Let's talk, though, about the obstacles that have materialized and that could still come.
Right.
Governments obviously are intimidated. You know, they all have fiat currencies. They all love their printing presses,
Sure.
and they don't want the world using Bitcoin as a mechanism of exchange. Right now, I'm not sure if most people consider it an investment asset or currency, but at some point, it's supposed to be the currency that runs the world.
Well, the pressure on Bitcoin that we've seen from threats of regulation and actual regulation is good. This is an ecosystem, as I said, and you want actors in the ecosystem to be legitimate. You want protection for consumers, and all the regulation that can come to Bitcoin will only help it because it's going to make it safer, and governments are going to have to get into a position where they protect consumers. Here in the United States, the CFTC and the SEC, they have a very important job to do. And when we get Bitcoin and all the other cryptocurrencies
But when you have countries like China
Right.
or Korea where the trading has been amazing, you know, perhaps Japan, I mean, they seem to be going beyond just typical regulatory concerns to full-fledged crackdowns.
Right. Well, China is unique because China wants to control its economy and its participation with other economies. And we saw China try to put pressure on cryptocurrencies, but then Japan, a much more open market, a much more willing partner with other countries, then reinforce their backing of crypto companies. And it's a big ecosystem, so there are going to be some bad actors that need to be put down, so to speak. But in terms of international regulation, the more regulation, the better for this market.
All right, 1,500 cryptocurrencies out there. Bitcoin's still the one you like?
Bitcoin is the leader. It's 45% of a $150 billion market, and it's going to stay that way.
James McDonald, thank you very, very much. Good stuff.
Appreciate it.